Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, an interesting start to the year on the stock markets, up radically one day, down the next. Not really a clear picture of what's going on, although there are some people who say the first week of the stock market in the new year predicts what it's going to be like for the entire year. In other words, very bumpy. What's your view on it?
Well, I did a study on, we've heard of the January effect. And I did a study a long time ago on the January effect, and I couldn't draw any real hard conclusions with it in looking back at the data over time. Going back to 1896, I don't remember seeing anything that jumped out at me as meaningful. Kind of like the study with, does it matter which party is in office? No, it really doesn't. It's kind of almost 6 of one, a half dozen of another. What, my concerns going into this year, I know that, this is all going on. This bubble mania is a lot longer than expected. But, I'm really starting to get concerned about a few things. And one thing I wanted to talk about and just give some personal experiences and is, supply chain issues. And I know people maybe get tired of hearing that, and that phrase is kind of worn out now because we hear it so much. But, a couple of things I wanted to talk about there. I went to the dealership, personal experiences. I think this is interesting. I go to my Chevrolet dealership to have something done to my vehicle and, GM truck. And, nothing, no big deal, but I get to talking to the service manager, and we're talking about, of course, the parts. And, parts are a big deal. The parts manager comes around, we start talking, and just in conversation, he tells me, like the engine that's in my truck, he said, not that I need it, I don't, but just the point that it's not available from GM. They don't know when they'll get it. It's back ordered, no idea. And, he's talking about other miscellaneous little parts, and he said, well, you know how many new Chevrolet trucks we have, full-size trucks, Silverados we have on the lot? I'm like, no, because this is a dealership that one whole side used to be, new trucks. And he said, none. Absolutely none. And so I go out of curiosity, I drive by the Ford dealership just to look, and to my surprise, it's the same thing. They didn't have any. They had used stuff on the new side, not a new Ford truck on the lot. And not to bore people, but this is what's concerning and weaving it into the economy. I have a friend that has an automotive parts business or an automotive service business, and he tells me he can't get parts. He says he spends 3 times as long, 4 times as long, chasing down parts where he should just be able to pick up the phone and call a part. He has to chase them down. Can't find them. Simple things. And I personally tried to buy a lawnmower battery. I go to the place where the brand I wanted. He doesn't have any. He picks up the phone, calls his supplier. I hear the man on the phone, no, don't have it. Don't know when I'll get it. And I finally found one at a parts supply house that, wasn't exactly the right one, but it was the same physical size, so it worked. And he had 2. I'm seeing this with dog food. I go to buy dog food. Hell, I can't buy dog food. Purina dog food. ProPlan dog food. Maybe it's available in y'all's area. Not here. Can't get it at PetSmart. And then I've talked to other friends, and they say the same thing. There's 2 or 3 different brands that people aren't able to buy. So That's concerning if we're having, such a robust recovery. Those two don't compute to me. And so as we move into the new year, I mean, that I really find that concerning.
Right now, we're told employment is probably as good as it's going to get in the U.S., and yet I'm sure there are people who say they can't find jobs.
I'm sure there probably are, but I think they'll hire anyone with a pulse at this point. You know what I mean? At least in this area, they can't find people to work. So I don't know what's up with that. I don't know how. I thought that all the benefits from the corona thing were over. I don't know that that's still a thing. I don't know where people have gone. I don't get it. So how can you have a recovery?
China's still shut. I was going to say, well, this is what happens when you allow all of your factories and production to go to foreign countries like China, where if one person is detected with a virus, they shut down entire cities and all the factories connected to it and the ports next door. So if your Purina dog food is made somewhere in China, it's sitting on a shelf or on a ship or hasn't been made yet.
Well, let me tell you what the lady told me. They had one bag, literally one bag. And, I get it. I go to the front and I went back since then. They have none. I asked the lady, I said, do you by chance know what's up with this food? And she said, yeah. She said, we actually had a memo from corporate, and she said that they can't get the raw protein to make that line. She said, they can't get it. It's a problem getting it. She said that it will come in spurts. She doesn't know what they'll get. They'll get partial orders they're expecting, et cetera, et cetera. But it's a problem securing the raw protein. And so I said, well, when do you think this will be resolved? Will you have a steady supply of food again, on that line? She said that the estimate was 2023 they were given. Right.
Now, of course, the U.S., when it comes to the consumption of meat by pets, is would be the fifth largest nation of meat consumers when it just comes to pets. So
wow.
You do, yeah. So you need a lot of meat to feed those cats and dogs.
Yep. And then, and not to be an alarmist, but, where does this end? Because, I got friends in other businesses. I got in every aspect of life. I talk to people and everybody's telling me they're seeing it getting worse, not better. And so my point, I guess, is that one, that in and of itself is concerning. But two, how do you have such a robust recovering economy when you can't buy dog food? So, there's a discrepancy in what we're being told and what I'm seeing.
Well, there must be a reason why China is telling people to get rid of their pets. Is we're running out of food. Pets consume an awful large amount of it. So perhaps, someday in the U.S. and Canada, we're going to have to get rid of our best friends and our furball companions.
I'm not going to get rid of my best friend.
Well, there used to be a time that cats caught their own food, keeping your house clear of mice and rats, and dogs consumed table scraps from humans. They didn't have specialized food.
We may go back to that day.
Yeah.
They may get, exactly.
Because dogs are omnivores like humans. They just can't eat chocolate or onions.
Yes,
yeah.
Correct.
Yeah, so whatever you eat, your dogs can consume. That's why the polar expeditions that used, instead of Shetland ponies, which died in the cold and they needed hay, they couldn't eat the same stuff as their humans, whereas the dogs could keep on going on whatever the humans were eating at the time. Or they can eat frozen fish. Because I've seen the sled dogs up north where I grew up. They used to just catch fish out of the river. They were frozen solid and they just throw them to the dogs and somehow they'd rip them apart and eat that. So, yeah, your pets are pretty tough. They don't need specialized food. All the food commercials are aimed at the humans. Has gravy. Your dog never had gravy when it was evolving. So with the supply chain problems, does that mean inflation is going to continue longer than the Fed thinks it is? Remember last year the Fed was saying inflation was transitory, but as long as we have supply chain problems, and some people have suggested to me they're going to last the entire decade, that means we're going to have inflation all through the 20s.
Yeah, and I'm seeing mixed signals with that. So let me try to explain what I see there. I mean, number one, I have said all along that the inflation we're seeing, I'm not denying the inflation we're seeing because, like I said, I go to the grocery store like everybody else, so I see it. But in looking at the inflation, it's not, it's from the supply chain issues and not from traditional inflationary origins, if you will. And so what I see looking at the charts that's in conflict in that in my mind is that I think we face, and I know this doesn't even compute, but what I see is evidence of a major top in commodities. And now, are we set up for that yet? No, but I see some of the leading indicators have turned indeed. And I think that one threat that we face here with this situation with the economy is, I said that, rather than the inflationary threat, which is real, I see it right now. I mean, that's what we're dealing with today. But I think the threat that is just, a few steps ahead of us, or maybe over the horizon, if you want to say, is deflationary collapse. I know that sounds crazy to say, but I see that evidence. I see it. And so I don't know how that conflict reconciles, but that's what I see.
We'll have more with Tim Cyclesman Wood right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, if this inflation peters out and it becomes deflationary, what happens with precious metals?
Well, I think precious metals may be telling us that this is going to peter out because, gold it's held its own, but it hasn't participated. So I think that there's a signal there. And, my expectation has been, like I said, preface this again, it's gone on far longer than imagined. They've done a masterful job at keeping it up and et cetera. But the expectation is, I think, that all asset classes peak together and it all goes down together. And, in that same breath, I have to also say that, I've been bullish on the dollar, and the dollar is proving itself above and beyond my expectations even. I mean, I expected a little bit more of a decline before this most recent rally that we've seen here into some cycle lows, but I mean, it can't even break and go into the lows, into the cycle lows deeply enough to give me, traditional oversold levels that I was looking for with those cycles. So anyway, that said, I'm bullish on the dollar, but I think that gold will get hit hard with everything else if this does in fact materialize the way that I'm seeing it's, wanting to set up on the charts.
The International Energy Agency says not enough money is being put into oil and gas exploration, and we're still a long way from electric vehicles taking over. And of course, we're being told right now the electrical grid isn't designed to double or triple in size to meet the demand, and we don't have the power generation to turn all of our gasoline and diesel vehicles into electric. So how's that going to turn out? So in the long run, I think oil and gas stocks are going to go up because gasoline prices, because of shortages, a short supply, because we're not exploring for it, because it's not politically correct to look for oil and gas right now.
And I agree with all of everything you said, 100%. I agree with. I know for a fact I have my nephew works in the oil and gas industry offshore. He tells me about, how, they're not even seeing the rigs in the Gulf that they normally see. I mean, they've pulled them up and moved them or brought them in. They've decommissioned boats, et cetera, et cetera, et cetera. So you're right. I know secondhand from good sources about that you're 100% right. But again, the conflict that I see is that when looking at the charts, it looks like, again, I said all asset classes, commodities, it looks like that they're blowing into a major top. Now, I don't have anything in oil to say, yes, it's peaked, but I think that's the direction that we're going. And I know that's a conflict. It doesn't make sense. But, again, that's what I'm seeing.
Mm-hmm. Now, China says they have a shortage of lithium to make batteries for the electric vehicles that they're planning to build, yet lithium is being treated like some kind of leprosy-infected dog on the stock markets. Does that make sense?
No, I don't know anything. I mean, the electric vehicle thing, the battery technology is something that, is outside of my wheelhouse. I'm not a fan of the electric vehicles. I think it's inevitable. It's being forced. And in fact, I'm speculating here, I don't know, but it makes sense to me that the reason there's no GM vehicles on the lot to speak of, and no Ford trucks either, is that I suspect they're retooling and gearing up for the electric vehicle push. In fact, it's probably been a year ago now. I went to the GM website and they were making a big spiel about it. There were some interviews on there, or presentations, I should say, about the electric vehicle push. And if I recall, I think their goal by 2025 was to have 30 electric vehicles to the marketplace. So I know that push is going on. I don't buy it. I don't think it's viable, and I agree with you. I don't think the electrical infrastructure can support it. And then in the end, where the hell do you get the electricity?
Well, Ford has said it's cutting off orders for its smaller size Maverick pickup truck. They can't meet the demand for it, so they're just not accepting any more orders. And if you order it, it's going to be a long time before you get it. So the supply chain, even for things that are built, as we would say in Canada and the U.S., built at home, they're not there.
Right. Yeah, and my point on the electricity is, I mean, I don't know. I'm not an electrical grid expert by no means, but I understand that the electricity has to be generated from some source, and I understand a lot of that comes from natural gas, coal, nuclear, whatever. But fossil fuels are involved in that.
Now, if you're playing the stock market with all the stuff that's going on right now, what's your strategy?
Me and, as my old buddy Kennedy Gammon used to say, dance close to the door. I think we're at another juncture where I see the market trying to turn, and maybe it has. I think, let me digress to interest rates if I could for a minute. I think what we're seeing is, the talk, when was it? Yesterday was the Fed meeting. And, the talk was, I didn't hear it myself, but I understand that they said, okay, they're going to raise in March. Is that right? So I think what they're trying to do is game the market again, or paint the illusion that we have a recovery that we don't have. And I really think that this market, it is in a position to where it may have turned, or is at least again trying to turn. And that's kind of an ongoing thing that I'm watching, monitoring, and discussing in the short-term updates in the letter. I think the equity market is extremely risky at this juncture. Let me answer it that way. But as far as the interest rate hike, they may do it, but I don't think that's realistic to expect in March because, one, I don't think the economy can take it. And then while I was waiting on you to call to do the interview, I was looking at some interesting data as well. And it's kind of a phenomena, if you will. Run through something real quick. The yield on the discount rate is generally greater than the T-bill rate. And looking back at a spreadsheet, in time, way back in the day, they'd let that spread get somewhere between 1.5% and 2%. They'd try to keep it there. And then as time has progressed, and particularly as we gotten into this environment, this post-2009 environment, that spread has gotten a lot tighter. In fact, the first hike, since we're talking about rate hikes, in 2010 came with that spread at 0.39, so less than a half a point. And then in 15, 16, 17, that time frame, into 18, when we got into, they were raising rates, we were at, like 0.6, 0.7, 0.5 range. Well, right now, we're almost at par. We're at 0.25 on the discount rate versus 0.2 on the 90-day T-bill rate. So it's like I said, we're 0.05 basis points away from par. So looking at that data, a rate hike does not make sense. And then looking at some other data, going back, and I just started working on this, so I don't have the data. It's not conclusive. I'm going to cover this in the letter when I get through the data. But what I have found is that there's only been 8 occurrences where you had an inversion, if you will, where the T-bill rate was greater than the discount rate. And like I said, if the short-term rates keep going up here, we're 0.5 basis points away. It'll be the 9th time if I counted them right, and I just did it on the fly right minutes before you called. And I don't think, my point is I don't think that's indicative. That's not an environment that is indicative of them raising. And combined with the economy, I don't see a rate hike.
Tim, anything else that we should be paying attention to right now that caught your eye?
No, that's pretty much it. I guess my point here with interest rates is that it's kind of a game of chicken. You asked me about the market. It is on fractured ground. There are cracks. I'm extremely concerned. And I don't think the market can take a hike. They may, be forced to do it. And if they do, they do. But again, I don't think the economy can take it. So I think the point is we're on fractured ground. I do see a turn trying to take hold, and it's all a matter of how well the market responds to the attempt to try to keep this thing going. But we are dealing with, I think, a ginormous bubble. And as we move into 2022 with the supply chain issues, with the inflation that we've seen, with the situation with interest rates that we're dealing with the overextended market, it truly is a treacherous time. And, I think that, it could come unraveled quickly.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.